Taxes on tips and overtime are eliminated for most Americans after the big, beautiful bill was signed by President Trump. Here to share more about how this will impact workers here in Michigan and Americans all over the place, financial instructor Michael Masserant from the Retirement Education Foundation. This was a big one. No tax on tips, no tax on overtime. What does it even mean? Yeah, this was one of the main campaign promises for President Trump while he was touring, and they got the job done partially. There are no taxes on tips and no taxes on overtime up to a certain extent. So for tips, if you can deduct about $25,000 worth of tips until you reach a certain income threshold. So if someone's earning about $150,000 or more of income, then that deduction goes away on that $25,000 of tip income. But most people who are earning tips, it's a lot of tip jobs, summer jobs for younger people, and they're not earning $150,000 at these jobs. Right. So for a lot of these people, it will eliminate these taxes on tips because they're not going to cross that threshold. What about like if you work for one of the ride-sharing services and you get tips on that? I mean, yeah, all these things count. Restaurants, ride-sharing services, all these tip sources count. Now, they do need to report the tips in order to have the tax deduction. So that was a big concern, is that if someone's not reporting the tips in the first place, then it won't count towards the tax deduction. But really, this should encourage people. If they were not reporting tips before, which is technically illegal, they should be reporting the tips because they're not going to be paying taxes on these things now. And now that tip income will count towards their Social Security record. That was a big concern for a lot of people who earned tip income and under the table, is that they weren't having those income sources show up on their Social Security record, and down the road they would get less Social Security income because the government never knew they got that income. That is a great point. Now, we also, I see the video there. We have so many servers that work in our area as well, restaurant workers. That is all tip tax-free. Yeah, so most of that income is from tips, and now a lot of that income is tax-free or very, very tax-favorable. And it's similar now for overtime, and this is another big thing. So overtime, for single filers, the overtime deduction is roughly $12,500. For married filing joint, it's $25,000. It's a big number. So if someone's married, if they're married, they're filing taxes jointly, and they have $25,000 of overtime, they now don't pay federal taxes on that. So if you were in the 22% tax bracket, you earn $25,000 of overtime, now you're paying about $5,000 less in federal taxes on that $25,000. Is that something that will come at the end of the year when you do your taxes? Because if you work a construction job, whatever the case may be, and you work a 6-day, 7th-day, and you get all that additional income in your check, and then you look and, well, taxes have been taken out of this. Right. You might go to your boss and say, hey, no tax on tips, but that's not the case. Yeah, that's a very good point. So on how taxes are withheld, the taxes will still be withheld out of the check as they have been, but come tax time, come April 15th, when you get your refund, you'll likely get a larger refund now, or at least owe a little bit less on taxes if you owed before, because of that tax deduction. Gives you a little bit of incentive as well, perhaps, to work more. Yeah, if someone was avoiding the overtime because, well, I'll bump a tax bracket, it's going to cost more taxes, that's not a problem anymore for a lot of people. And we've got on the screen right now how to use some of these tax savings, because these are 3 parts of anybody's financial outlook that really we struggle with. For sure, and this is a common thing. I'm sure it'll pop up again next year around tax time. People get that refund and they want to know, what should I do with it? And obviously it's tempting to get that refund and go on vacation. But the number 1, pay off high interest debt. Number 2, pad the emergency fund. Number 3, save for retirement. Pretty good stuff. All this feels so confusing, and we were talking in the first hour about it. This is a 900-page bill. Yeah. Who even reads that? The IRS auditors do, and they pass on the information. They try to boil it down for people. But this, as we were talking earlier, for a lot of people under the previous tax laws, most people, 94% of people, were taking the standard deduction, meaning you earn some income, you have your standard deduction, you're not itemizing, taxes are pretty simple and easy, call it a day. Under this new bill, they're projecting up to maybe 30 or 40% of people might itemize now because of the SALT deductions, because of the deductions on auto loans for cars built in the United States. There's a lot more deductions now, so taxes might get a little more complicated this time around. Tax advisors and tax people that do the tax at the end of the year, accountants. It's a multi-billion-dollar business for a reason.
It is.
This tax code is so complicated that the average person really has no idea how to go about doing it.
Especially with these new tax bills.
Do it right anyway.
I do know some CPAs are scrambling to figure out themselves how to explain to their clients and everything, how this is going to work. It'll be interesting next tax season for sure.
Michael Masserant, Retirement Education Foundation, refedu.org.